Last month's NFP shocked the market with a much stronger than expected jump in job growth. But a resilient labor market isn't enough to pull the Fed out of its dilemma. Inflation remained elevated, and the Middle East conflict continues to add more uncertainty to the economic outlook. That makes the central bank remain cautious on its next moves. That's why this week's NFP matters. It could reveal how much the Middle East conflict is starting to impact the jobs market, whether the recent strength in job growth is sustainable, and whether the Fed is any closer to signaling its next move on rates. The report will be released on May 8th at 3:30 p.m. Stay with me as I break down what the data could mean for markets and how to trade around it. Before I break down the upcoming jobs report, make sure you subscribe to our channel and turn on notifications so you don't miss out on any market updates and insight. The March NFP dropped a surprise in the market with a robust increase of 178,000 jobs, while the unemployment data edged down slightly from 4.4% to 4.3%. The wage growth, however, fell short of the market expectations, with the average hourly earnings increasing by only 0.2% month over month and 3.5% year over year. The resilient job growth reduced the hopes of a Fed rate cut, driving the US dollar index slightly higher. Conversely, gold edged lower on the escalation of the Middle East conflict. On the other hand, all three US stock indexes edged higher, while the oil prices were up on the OPEC oil output boost. To trade around the NFP release, you've got to watch the forecast numbers. Comparing these forecasts to the actual data gives you a clear picture of where Forex, commodities, and stocks could move. The upcoming April NFP is expected to edge lower to the range between 73,000 and 95,000. On the other hand, the unemployment rate is projected to remain unchanged at 4.3%. The wage growth is expected to be higher than the previous NFP report, with the average hourly earnings increasing by 0.3% month on month and 3.8% year on year. So how could the market react to the NFP report, and what should traders watch out for as volatility kicks in? In a moment, I'll break down three key assets: the dollar index, gold, and S&P 500. So stick around for the full technical analysis. Let's start with the US dollar index. The Middle East tensions have pushed the dollar higher. If the NFP report beats expectations, the dollar could strengthen further and rebound to the 99 level, targeting the resistance at 99.07 and 99.44. Conversely, a weaker than expected job growth will weaken the dollar, pushing it down to support at 97.12 and 96.74. Now let's look at gold. XAUUSD has been under pressure as the US-Iran tensions eroded its safe haven appeal. If the NFP report fails to meet the forecast numbers, gold prices could rally and extend to the resistance at $4,916 and $5,072. Conversely, a stronger than expected job growth could continue pressuring the yellow metal and driving it to support levels at $4,412 and $4,251. And now, the S&P 500 index. The index has rallied in April and sustained the strength into early May, staying unaffected by the Middle East tensions. A stronger NFP reading this week could boost economic growth expectations and lift the index to 7,285. Conversely, a weaker report may signal a slowing growth, pushing the index down to 7,095. That's the full breakdown. Remember, this is just my perspective on the market and not financial advice. If you find this useful, let me know in the comments. Hit the like button, share it with someone who needs to see it, and don't forget to subscribe with notifications on so you don't miss the next market updates.